In July 1944, with Europe in ruins and empires collapsing, the world gathered in a quiet New Hampshire hotel to redraw the future of global power. In that room, a dying empire handed off its financial crown, and a new one took its place. But it wasn't just a victory for the dollar, it was the continuation of a centuries-old cycle, one every empire had followed before. One the United States is now walking, step by step. The pound had ruled the world trade for over 200 years. But after two devastating wars, Britain's economy was wrecked. Debt had soared to 270% of GDP. Its empire was vast, but hollow. And in Bretton Woods, surrounded by 43 other nations, the torch was passed. The dollar would now anchor the world economy, backed by gold, backed by American might. But history is rarely linear. Power rises, peaks, and then bleeds. The pattern isn't theory, it's documented. It's visible. And it began long before the dollar. In the 1400s, Portugal was the first to dominate global trade. Its ships mapped the African coast, reached India, and crossed into Asia. Lisbon became a trade hub, and the Portuguese real became the currency of choice. But empire is expensive. Military outposts across 4 continents drained Portugal's wealth. By 1580, the kingdom collapsed into Spain's control. Spain's rise was fueled by silver, one mountain in Bolivia that poured out half the world's supply. Minted into coins marked with a simple P, these pieces of 8 became the world's first truly global currency. But the flood of silver sparked inflation. Wars burned through the treasury, and Spain defaulted on its debt 4 times in 40 years. By the 1600s, Spain was bankrupt. The crown had lost its luster. Then came the Dutch, small in land, massive in influence. They built the first stock exchange, invented public company shares. Amsterdam became the financial engine of Europe. The Dutch guilder rose as the reserve currency. But their downfall, like the rest, came from military overreach. The Anglo-Dutch Wars strained their economy. The Dutch East India Company collapsed. And by the late 1700s, the Netherlands faded from global supremacy. Britain emerged next. Industrial power, colonial dominance, and naval control gave the pound its reach. At its peak, over 60% of global trade ran through sterling. The gold standard solidified its strength. But World War I buried Britain in debt, and World War II finished the job. By the time of Bretton Woods, the pound had lost its grip. The dollar replaced it. For the next 25 years, the US dollar was backed by gold. But in 1971, that link was severed. Convertibility was suspended. The gold standard was dead. Yet the dollar held firm, because it found a new pillar: oil. In 1973, amid the OPEC oil crisis, the US struck a deal with Saudi Arabia. Oil would be priced only in dollars. Soon, all OPEC members followed. Every country needed oil, so every country needed dollars. This system created artificial demand. It allowed the US to run massive deficits without fear of collapse. By 2000, the dollar accounted for over 70% of global reserves. Its dominance was unmatched. But the cracks are growing. As of 2024, that share has dropped to under 58%. Foreign ownership of US Treasuries has fallen from over 50% in 2008 to just 30% in 2025. BRICS nations are building payment systems that bypass the dollar entirely. BRICS Bridge, central bank digital currencies, bilateral trade in local currencies. Meanwhile, America's own balance sheet is faltering. Total federal debt stands at $36.4 trillion, 124% of GDP. The US has spent over $8 trillion on wars in the Middle East. It maintains 900 military bases in 130 countries. This isn't unprecedented. It's stage 3 of the pattern: overextension. Every empire followed it: Portugal, Spain, the Dutch, Britain. The average lifespan of a global reserve currency is 95 years. The dollar is now 81 years into its reign. Transitions don't always come with fanfare. Britain's decline was slow. It took decades. Sterling remained dominant even as the British Empire fell. But when the shift finally came, it was irreversible. The same signals are flashing now: declining share of reserves, growing debt, rising competitors, and a multipolar world emerging from the margins. The next reserve currency may not come from one nation. It may come from many, or from none at all. The pattern is repeating, and this time, the cycle's ending may already be in motion.